Hello and welcome to Virtual Investor Conferences. My name is Phil Carlson, and on behalf of KCSA Strategic Communications, as well as our co-host OTC Markets Group, we're very pleased you have joined us for a fireside chat with Nova Cannabis, one of Canada's largest and fastest growing cannabis retailers. Their session will be moderated by Frederico Gomes, Vice President of Institutional Research at ATB Capital Markets. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Scheduled Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Marcy Kiziak, Director and CEO of Nova Cannabis, which trades on the OTCQB venture market under the symbol NVACF and on the TSX under the symbol NOVC. Welcome back, Marcy and Frederico.
Thank you, Phil. Welcome, everyone. Yeah, thank you, Marcy, for taking the time here to chat with us today. Maybe to start off here, first question, for those that are unfamiliar with the Nova Cannabis story, could you provide an overview of your recent achievements, your strategy, your footprint in Canada? Just a brief overview of operations here.
Sure, I'd be happy to. So Nova was a first entrant into the market upon legalization. We opened upon legalization with 5 stores in Alberta, and then followed a year later on 420 with our first store in Ontario. The majority of our stores are in Alberta and Ontario right now, with one in Saskatchewan. We operate currently 99 stores. Our 100th store is about to come online, which we're really excited about, so stay tuned for that. Again, primarily Alberta and Ontario. We operate under the Value Buds banner, as well as on a smaller scale under the Fire Sale banner, or also have fire sale elements inside of our stores. And so as a leading everyday best price retailer, we've built a model. We were a disruptor in the industry. We originally started as Nova Cannabis stores, quickly evolved to Value Buds, and were a first mover from a discount perspective when we identified that model didn't exist in the Canadian market. And our goal really is to continue to grow, to do what we can to beat the illicit cannabis market and provide exceptional value to our customers. From a recent achievement perspective, in 2023, we had a great year. It was really strong for us. We achieved free cash flow, record revenue, and really good margin profiles. We solidified our national footprint. And from an impact perspective, we continue to focus on the fundamentals. We have always said that we operate with operational efficiencies, traditional retail principles, and focus really hard on making sure that we've got long-term growth and long-term sustainability, and managing a very quickly developing market.
Perfect. Thanks for that. So let's dig into some of that. And first, let's talk about growth.
Sure.
So you are already one of the largest retailers in Canada. What is your growth strategy? How do you look at M&A? How do you stack that against maybe organic builds? And how should we look at those two options here?
Sure. We've said since the beginning, so we had the luxury when Nova first started, we first developed and launched the banner, we had the benefit of having 25 years of liquor retailers as a partner. And so we have a lot of history in figuring out where the best place is to put regulated products. And so we've always had a very focused real estate strategy, and it's really been real estate first in many cases. And so we continue to focus on that. And so we think that there is value in both an M&A strategy as well as an organic growth strategy. Clearly organic growth is a little less likely now, since we're seeing good saturation and in some cases oversaturation of some markets. And so in those cases, M&A does become the strategy for us. Every province is different. As you know, in Alberta, the build-out requirements for cannabis stores are different than most other provinces. And so, in Alberta, where we've hit a point of saturation and we've got those requirements, M&A makes a lot of sense. In areas like Ontario, where we still believe that there's areas for opportunity, despite there being a lot of licenses in Ontario, there are absolutely areas that are not that are still available and not saturated by any stretch, or in some spaces not touched yet. And also in Ontario, there are still areas and municipalities that don't permit cannabis. So we think that from an organic perspective, Ontario is an ideal spot, but M&A really will carry us through in all provinces. The prairie provinces have always been a focus for us, but a little more careful there from a real estate perspective because the population is more densely populated. With the cities are more densely populated than rural. From a BC perspective, we're really excited. We announced a couple of weeks ago the assignment of the leases in BC, the Dutch Love leases, to Nova. And so that added 4 stores to our portfolio, 1 in Ontario and 3 in BC. As the industry knows, BC is a very difficult market to enter. And so, and it's quite a time-consuming process. So the assignment of those leases and the development and introduction of value buds into the BC market is a real capstone for us. We're really excited about it. We're currently in the process of renovations, and we'll launch those stores as value buds very, very, very shortly. One of them tomorrow, and so we're excited about what that looks like for us. So I would say that the strategy varies a little bit by province and a little bit even geographically and regionally, but we're keeping a very close eye on it. The last thing I'll say is that we make really good decisions around where we grow. We don't grow for the sake of growth. We're not growing for the sake of store count. Rather, we're looking to build out this business really effectively. And so looking for areas where it makes sense for us, where we can properly manage stores, properly manage efficiencies, and properly manage scale. So we know that scale is critical for us and for cannabis retail, but we are aiming to scale very responsibly.
Okay, and to that point, scaling responsibly, I guess you have approximately 100 stores in Canada at this point. 99. Okay. Do you have a goal in terms of where do you think you're going to end up the year, and also long term? What do you think the market can sustain here, and you're targeting for the long term?
Yeah. So we're lucky. We've actually never closed a value bud store. And so, which doesn't mean that we're so stuck in our own process and our own ideas that we aren't looking at them in a very discerning way every single month. We've never closed one, and a lot of it has to do with because of our real estate strategy. And so, from a growth perspective, it's going to be really a matter of where we think we can have the most impact, or where we think the market is going. And so I can't give you a firm number, but I can tell you that we are very actively looking at scale from both an M&A and from an organic growth perspective. We think we've always, we're in Edmonton, so I think it's safe to say this, but we think we've always sort of skated to where the puck is going. And so, which we're trying to do here as well. So looking for areas where we think there's going to be future development as well, which means that we're looking at industries, we're looking to see what that looks like. So in order to give you an actual number, it would be a little bit difficult because we're looking at it from both. But I'll tell you that scale and growth is our prominent and predominant driving force right now.
Makes sense. So you mentioned some of the provinces that you're looking at, the prairie provinces, BC. Mm-hmm. You also have Ontario, obviously. So I guess just geographically here, near term, where do you think is the most attractive opportunity?
Great question. Ontario really is same store sales in Ontario are very strong, and we're continuing to see growth there. And so we do think that there's opportunity there. So that's a primary focus for us right now. Alberta is a bit of a different market from a growth perspective. So I'd say Ontario, and we'd really like to see the cap lifted on BC. Been chatter of that for a while, but haven't seen any considerable or concrete progress on it. So we'd like to see what that looks like. Were the cap to be lifted in BC, we'd certainly look at growth in that province as well. But right now, I'd say Ontario really is the focus right
now. Let's talk about consolidation. So we've seen the Canadian retail market consolidating over the past few years. How far along are we in that process? Are we still going to see a lot of bankruptcies and M&A happening? We still have a lot of runway here on the consolidation process.
When we're still seeing a lot of inbounds. A lot of inbounds for smaller footprints, smaller bodies of stores of packages, 3-4 stores still coming in pretty strong. Ontario, I think the market is still growing, and so I think we're going to see consolidation look a little different there than it is in Alberta. Alberta, we're seeing licensing has flattened and maybe contracted a little bit. So I think that it's going to, like most things in this industry, it's going to happen at different scales and different paces in different provinces. But I think that the consolidation will continue probably for at least another year or two. And then I think we're going to end up with a couple of large retailers, large national retailers, and then a good solid amount of smaller retailers and independents who found their niche. So I'd say we're not done yet. And the inbounds continue to come in.
For sure. So as that process is ongoing, do you see opportunities here for price increases at the retail level?
Again, I think it really flows back to what's happening regionally and geographically. We're seeing stabilization in pricing, but we're also being very strategic with our price files and very dynamic with our price files, because I think that we're seeing a lot of regionality right now, which is a little bit different than what we'd seen historically. So I think that we're going to see that prices in some cases have bottomed out, but I do think that we're going to see areas of high saturation and even so much as neighborhoods of high saturation continue to see some dynamic pricing there. But I do think that there is some potential. I think for us, the real potential is going to come with private label. We've just recently launched a new flavor in diesel and berries with new formats. And so we've now launched a pre-roll for the first time, and then also a 28 gram and a 14 gram in this particular flavor, with more offerings to come towards the end of the year. These are all in Alberta right now, soon to come in Ontario. I think that when you start to look at price increases and really managing that, private label is going to be critical. We recently saw some news in Alberta where private label is changing a little bit to allow a bit of exclusivity, which is something we haven't seen up until now. And so, allowing banners and retailers to be able to have some products in their stores that are not necessarily offered throughout the entire portfolio or other entire body of licenses in the province. And it's the first time we've seen that. So I'm really excited about what that looks like. So I think that our private label strategy and the fact that we've been in this private label strategy for the last 4 years really does give us a leg up, because it's well developed and we have a customer for it today.
So talking about the private label, on the margin side, what's the sort of benefit that you get from that private label strategy? And thinking about the sales mix that you have right now in terms of private label products and regular products, where do you stand, and do you have a target in mind?
So from a margin perspective, there's plenty of opportunities. This new news through AGLC gives us additional opportunity for there to be some margins, to capture some margin in there. One of the benefits and one of the things that happens a lot in the cannabis industry is price matching. And one of the things that becomes, when you have a private label strategy and a private label that is exclusive, price matching goes away naturally to some degree. So it does allow you to capture some margin that way. And then, also our name is prominent across the package. And so, we do have some exclusivity on it simply by virtue of that. But I do think that, and again, this really ties into our ability to work really well with LPs and our relationship with SNDL to allow us to build out the right products for us and have a lot of influence and control over what the quality of that product looks like. And so for us, the strategy really is to continue to focus on categories where we over-index. And so the vapes have also done incredibly well. The big bags have done incredibly well, and we expect big things from the pre-rolls. And so really leveraging off of these categories where we know we already over-index, and making sure that the product is consistent and that the consumer is something the consumer really wants. From a future-looking perspective, we're really interested in adding an edible. We're interested in adding additional flavors of the vapes and additional formulations. We've got a couple of them right now. There's 3 different flavors that will be in market. And so I think we've really hit where we're seeing, again, going where we think the market is going, which is pre-rolls, which is convenience, and then edibles will be the next one that we hope to see in the market.
Another portion, I guess, of your margin strategy is your data-free program. So can you talk about the opportunity that you see in that program and how it can help, your margins?
Sure. So we made considerable changes to our data program, our proprietary licensing, proprietary data program earlier this year. And we did it because we want to make sure, like everything else we do, that we're driving a level of sustainability. And so our program is an important contributor to our margins, but we also think it is an important program for the industry on the whole, and allows us to be able to work flexibly and nimbly with the LP participants in the market in a way that allows us to continue to make sure that we're putting the right products in the stores at the right time, and again, working well to connect consumers with what it is that they're looking for. We've invested a lot in this program to make sure that it's scalable, and to make sure that it's compliant. Because certainly there's been lots of concerns and noise about proprietary data programs over the last couple of years. For us, it was important that there was no noise around ours, and that it was compliant. And again, scalability really is a consistent theme for us, because we need to make sure that we can grow this business and grow all of these programs without added costs. And so we absolutely think that we've got lots of runway on this program. We continually review the program to make sure that it's the best possible value across the board, and that we're thinking very creatively about the value that the program adds both for us and our LP partners.
So thinking about your LP partners, the LP market has been obviously very challenging, and we see some liquidity issues with some LPs. So how does that impact your business, not only in terms of the data fee program, but just overall?
Sure. So from a data fee perspective, I'll start there. Part of the reason, or frankly, the driver for changing that program was sustainability and making sure that it was sustainable for LPs. As a retailer, we require providers. And so we do need to make sure that we help this industry continue to stay and flourish. So that really was one of the reasons that we made that change. We also, again, want to be a good partner and a good steward in the industry. So from a data perspective, that's one of the drivers of changing the program. From an industry perspective, keeping in mind that most of our stores are located in Alberta and Ontario, where we purchase cannabis directly from the boards, from the provincial boards, we don't carry a lot of that risk. So we're good there. We manage it really tightly and really closely to make sure from an inventory perspective, because for as much loyalty as we're seeing in this industry right now, which is still very much a work in progress, we don't want to build a customer for products that we won't have long term. And so longevity is really important to us. And so we watch really closely to make sure that we're making good inventory decisions there as well. So we balance it that way. But we operate really efficiently and really effectively, so we don't see a lot of inventory buildup on those types of things. So fortunately, we don't expect there to be a lot of impact on us from an AR perspective or from a liquidity perspective.
You mentioned loyalty. So are you planning on launching a loyalty program?
We are, much like the data program, the loyalty program. We've been working really hard on trying to find a good program that is meaningful to the customer base, but also doesn't require a considerable amount of customization province over province. And is scalable and allows for a multi-banner approach. So as I said in the beginning, we've got 2 banners under Nova. And so we really want to make sure that all of those things factor in. So we were one of the few national players that have multi-banner strategy. And so all of those things do matter. But for us, it's about making sure that it is compliant across the board. And also is meaningful to the customer and isn't. We know there's parts of other loyalty programs that customers don't identify with or are uncomfortable with. And cannabis is still a new industry to some degree, and so really making sure that we hit all of the right marks. Absolutely working on it, and hoping to get it stood up sooner than later.
Perfect. I wanna go back to a question I made earlier about prices. So obviously I asked about price increases at the retail level, but uh, just curious if you look at the other side of the equation at the wholesale level, do you see prices still compressing in Canada, or do you think prices have stabilized? So what's the sort of environment right now?
Sure. So I think, so what we're seeing on the whole really is stabilization. We are actually seeing an increase in some cases. In some, really where we're seeing the decreases really is where we're seeing either SKUs being end of life or being delisted by the regulators, by provincial boards. So we're absolutely seeing a contraction on those ones. But we really are starting to see stabilization and like I said, to some degree, some increases. We're still seeing from a customer perspective, we're still seeing customers looking at price as a driving factor. And so, but we do have a customer really in every price point. So trying and working really hard on making sure that we're keeping prices level, and reasonably consistent within the category bands. But I would say that we're seeing stabilization.
Talking about what the consumer wants, you mentioned price. In terms of product categories, what are some trends that you're seeing? Also, maybe THC content, and what else is at play here for the consumer?
Sure. So we're seeing a couple of things. We're seeing edibles and beverages increase, which is interesting. Which also means it's driving the prices, some regulation and some decrease of the prices in those particular categories, because we're seeing lower price edibles and lower price beverages enter the market and become quite popular, and so it's driving some change in the entire category. And from beverage perspective, I'm actually quite excited to see it. We are seeing people make trade-off decisions with beverages, and so excited to see that. But really, those are basket builders. Otherwise, we're seeing people move to infused pre-rolls, all-in-one vapes, infused vapes for infused pre-rolls and that type of thing. So we're actually are seeing people shift a little bit to convenience and ready to use formats. Flower does continue to be our largest category, though we are seeing a decline, and the people who are moving from that category are moving over to all-in-one vapes and pre-rolls and infused pre-rolls. Infused pre-rolls particularly attractive because of the potency that comes along with that, and vapes as well. But from a consumer perspective, it is still very much location, so availability as well as price. But then we are seeing some trading in the category. We are still seeing certainly over-indexing on big bags and large format, but we are seeing recessionary pressures do certainly translate to people trading down in some of these categories. And we're also seeing in some of these value categories and big bags, some really great products show up as well. And so it's certainly changed a lot, especially over the course of the last year. But the trend and what we're continuing to watch is people moving to convenience formats.
Moving on here, you have a close relationship with SNDL, obviously. So could you talk about that? What sort of advantages you have from that relationship?
Sure, happy to. So we have a very healthy relationship with SNDL that we're very proud of. We have a shared services agreement, as you know, which allows us really to be able to leverage off of shared services, off of expertise, and be able to again manage how we look at scale. It gives us access to an M&A pipeline for sure. Gives us the ability to look at things from a really critical eye and what makes the most sense for us, what fits our business and what fits the portfolio. The Dutch Love assignment is a great example of that. Those were originally SNDL. It was an SNDL licenses that assigned to Nova, which we are really excited about. That's going to be really exciting for us to see how that shapes up. The private label strategy. So SNDL does make our private label product, and again, really important that we have influence over the types of products and the quality of the products, because we know how important quality is. So that certainly is another advantage for us. And then really consumer insights. And so we get to see this industry at every level. And so from an LP level, from a retail level, and so the way that we get to peer into the industry and peer into consumer insights and feedback is really helpful for us, and gives us many more data points for which we can make decisions.
Perfect. Moving on here, talking about your balance sheet, how should investors think about that? And maybe just tying that up together with your free cash flow. You are positive, you are generating free cash flow. How do you plan to sustain that?
Sure. So, I mean, the free cash flow, we've been free cash flow positive for the last 3 quarters. We are very proud of that. We operate, as you've heard me say multiple times, very efficiently. We don't, we take our responsibility to our shareholders very seriously, as well as to our customers. And so our strategy around that really does ring true, and we see it come to life with free cash flow. From a growth perspective, from a balance sheet perspective, we are protecting it very closely. We need the ability, we want the ability to operate as flexibly and nimbly as possible, and be able to take advantage of the opportunities that are coming our way from a license and from an M&A perspective. And so we are watching it very closely and protecting it very closely so that we can use that cash to make the best possible decisions for us and for the business, and not do so without constraint. And so what we really want people to know is that we've shown strong stability. We've done what we said we were going to do, and our balance sheet shows our ability to grow sustainably and make really good decisions.
When you look at your valuation right now compared to peers, what are some steps here that you can take to close the gap that you see in your multiples?
Sure. I think we're undervalued, and there's just no other way to look at that, is that we're an undervalued business. We see it, we hear it all of the time. It's an industry issue. But in order to close that gap, I think there's a couple of things. It's frustrating that we're so undervalued. But you look at our key performance indicators and see how strong we are, and we are hitting every target and absolutely continuing to do what we said we were going to do, and continuing to be dynamic and pivot with the industry. I think for us, some of the things that we can do to close that gap is going to be how we grow the business, and how we demonstrate sustainable growth. We appreciate that our growth has been slower than other participants, but the reality is, for us, it is really about scalable, responsible growth. And so this will be a growth year for us. We're planning for growth, and planning to have greater impact, including through BC, including through the Prairie provinces. And so I think that through prudent growth and operational efficiencies, we will start to see that gap close. But we understand that we're undervalued.
Last question. We have about a minute left. So what are some of the key catalysts that investors should be looking for the remainder of this year?
Absolutely. Private label, for sure, especially with these changes in Alberta, really does give us the ability for this exclusivity. It is huge for us, and allows us to really lean into the private label and put extra resources into the private label program. I think that for sure. I think the continued improvement of our website, our web presence and e-commerce, paired with our in-store execution, which we're now planning for those two things to pair up. The growth, which again will be responsible and intentional, and very thoughtful in terms of how we grow for the sustainability and the scale of our business. And then lastly, our thoughtful and very deliberate management, our cash management and balance sheet management.
Well, thank you very much, Marcy. Thank you, everyone that attended. That concludes our chat. So have a great rest of your day.
Wonderful. Thank you so much.